Hello traders, how are you? This is Bilal and this is my YouTube channel Forex Billionaire. I hope you all are winning profit in the market. But in case if you are not winning the profit, you are in loss. There could be different reasons. You don't need to worry. I'm here to help you and I will tell you different ways from which ways we can earn a respectable profit in this market. So for today, I have a topic of candlestick study. In my previous video, we learned about the single candlestick study, and today we will learn about two candlestick pattern. In our previous video, we learned about single candlestick pattern, and today we will learn about double candlestick patterns. But before start of the video, I just need your help. So if you want, I can post different videos from which you can get knowledge and you can win profit. Just go on the bell icon, just subscribe the channel, like the video and share. That's only the help I need from you. So let's move on and start for today video. Okay traders, so here you can see there is two type of patterns. One is bullish engulfing pattern and the second one is bearish engulfing pattern. So in bullish engulfing pattern, it consists of two candles. So when two candles form like this, then the pattern which form is a bullish engulfing pattern. So with the name you can think this is a pattern in which one candle will engulf a second one, or in a simple word, if I say one candle will eat the entire second candle. So from the example we can see this is a red candle, or we can see a bearish candle, okay, and this is a bullish candle. But you can see the bearish candle is a small candle and the bullish candle is a big one candle. So you can see the entire body, or you can even see the entire candle, the bearish candle can be engulfed in a bullish candle. So this green candle can engulf the entire red candle. So this type of candlestick pattern is known as bullish engulfing pattern, in which a bullish candle can engulf the bearish candle. The body of bearish candle can be engulfed in a bullish candle. Moving on to the second pattern, it's bearish engulfing pattern, in which you can see there is a small bullish candle and there is a large or big bearish candle. You can see the body of the bullish candle can be entirely engulfed into the bearish one. So this bearish candle can eat a whole body of this bullish candle. So this type of pattern, candlestick pattern, is called bearish engulfing pattern. When we will go to the live chart, I will show other examples as well, and I will tell you when the bullish engulfing pattern form or bearish engulfing pattern form, what does it mean. This is our second candlestick pattern. The first one was bullish and bearish engulfing, and this one is bullish harami and bearish harami pattern. So in this pattern you can see a large, the first one is bullish harami pattern. So in this you can see there is a large bearish candle and then there is a small bullish candle. So we can think that this bearish candle is a mother candle and this bullish is a baby candle. So when you see this type of pattern, there is a mother candle which will be bearish and the second one is a bullish candle, a baby candle. The smaller than the bullish candle, the baby candle will be the smaller than the bearish candle. But there will be some other candles which will be forming after this baby candle, which will tell us that the trend will reverse and there will be a trend reversal and the market will go up. We will see the example in the live chart now. So this type of pattern is called bullish harami pattern, where there is a mother candle, the bearish one, and then there's a candle which is the baby candle, the green one, and after this there will be the trend reversal and the market will go up from here. So the second one is bearish enemy pattern, in which you can see there is a large green candle, the bullish candle, and then there is a baby candle, the bearish candle. So this bullish one is the mother candle, and there is a baby candle, the bearish candle. So you can see this type of pattern is called as a bearish enemy pattern. When we will see on the chart, I will tell you that this type of pattern are mostly formed when the market is in uptrend. And when this type of pattern formed, after this pattern, there will be the confirmation of sell. It's not 100%, but in most cases, when this type of pattern is formed, the third candle, the next candle, will be the bearish candle, and which will tell you the trend will be reversal. So now we will move on the live chart so I can show you the examples there. Here you can see there is an example of bullish engulfing candle. So just see here, this is a bearish candle and this one is a bullish candle, but you can see the entire body of the bearish candle can be engulfed, or this green candle, the bullish candle, can eat the entire body of this bearish candle. When you see this type of pattern, this is called bullish engulfing. But what is the effect of this candlestick pattern? Now you can see after this, the formation of bullish engulfing candle, the next candle, we have to see the next candle. If the next candle is closes above, if the next candle is also a bullish candle, then we can say yes, there is a trend reversal or market will go up in uptrend. That's not 100%, but in 60 to 70% cases, you can see if there is a formation of bullish engulfing candle, then after the confirmation of the next candle, market can turn up to bullish. Now you can see after this formation of bullish engulfing candle, just see the trend. The market is going up from here. So how we have to trade this? When you see the confirmation of the formation of the bullish engulfing candle, you will wait for the next candle. If the next candle is also a bullish candle, then you can take entry of the buy from this point of the closing of the other candle, and you can put the stop loss on the low of our pattern, the bullish engulfing pattern. You can just set your stop loss on the low of this candle. Either it would be a bearish or the bullish candle low. You can set the stop loss there, and you can put the take profit as per your ease. It would be 1 by 1 or it could be 1 by 2. It depends on the market. So that was the example of bullish engulfing. Now we will move up to our second example of bearish engulfing. So traders, here you can see it's an example of bearish engulfing. Here you can see there is a candle, a bullish candle, and this one is a bearish candle. You can see the whole body of the bullish candle can fit into or can be engulfed into a bearish candle, and after that there is a confirmation of a bearish candle as well. Once you will see a bearish engulfing candle, you have to wait for another candle to be formed, and if that one as well is a bearish candle, then you can take your entry on the closing of that candle from this point. I can draw it for you. From here you can take an entry and just see from here, from our entry point, how much deep the market goes. And you can set your stop loss here at the high of this candle. You will set your stop loss. So that was an example of bearish engulfing candle. You can see how much important this candlestick pattern and how much effective is that after the formation of this candlestick, mostly in 70 to 75%, the market will move in the bearish. If it's a bearish engulfing, or vice versa, if it's a bullish, then the market will move into the bullish, in a bullish pattern, the uptrend. Now we will see other examples. So traders, here you can see there is an example of bullish army pattern. Here you can see there is a mother candle, the large bearish candle, and there is a small, which you can refer as a baby candle. So here you can see after this candle there is a formation of another bullish candle, which will confirm us that the market will turn up from this point. So after that you can see the market move in an upward direction. After the confirmation, you can see if you take an entry from here, so traders, here you can see there is an example of bullish arami pattern. You can see here this one is a large bearish candle, which you can refer as a mother candle, and this one is a small bullish candle, which you can refer as a baby candle. And once you see this type of pattern, for the confirmation you have to wait for other candle to form. And now after this formation of this bullish arami pattern, the confirmation will come after another bullish candle. And once you get the confirmation, you can take in your entry after the closing of this candle. And now you can see after this formation of pattern, the market moves up in an upward direction. And where should be your stop loss? Your stop loss would be at the low of the candle. And where should be your take profit? It could be once you take an entry from this candle, it could be up to 1 by 1 or 1 by 2. Now we will see another example of bearish arami pattern. Here you can see there is an example of bearish arami pattern. You can see this one is an bullish candle and this one is an bearish candle. This bullish candle can be referred as a mother candle, and this bearish candle can be referred as a baby candle. After the formation of this pattern, the bearish arami pattern, you have to wait for the confirmation, and once the confirmation comes, you can take entry. You have to wait for the formation of another bearish candle. You can see here there is an bearish candle, which will tell you that now market will be in a downtrend. And after this confirmation, you can see market from the top goes at the bottom, even more down, but this much profit will be enough for the trader. So where should we enter? This is the question. You have to enter here at the closing of another candle, in the closing of the third candle. So once you get the confirmation, you will enter from here. And where should be the stop loss? The stop loss would be at the high of the candle. The high of the candle where the bearish arami pattern formed, that will be the stop loss. And the take profit, it could be 1 by 2, 1 by 1, 1 by 1.5 as per the trader knowledge. He or she can put the stop loss and the take profit according to his. Okay, and where should be the stop loss? Stop loss should be at the high of the candle, and the take profit, it could be 1 by 1.5 or 1 by 5. So trader, that was all for the class for today. And in the next video, I will tell you about the 3 candlestick patterns. And these are the 3 videos: the single candlestick pattern, the double, and the third one. So anyone who are at the beginning stage of learning this market or want to enter this market, he or she should watch this video. They will get a lot of knowledge from this video. Stay tuned for next time. Remember, subscribe the channel so you get the notification every time. And good luck. We'll see you again.